Okay, what's up everyone? This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And of course, today is Friday, so that means what I have here is my next installment of my live option trading series, and there's a lot for me to show you in this video. And first, you're going to see the new position I put on in CCJ. In particular, I sold a naked call option on this stock. You're also going to see the pretty aggressive adjustment I made on Wynn Resorts. Specifically, I turned my initially short Strangle into a straddle and also shorted the stock. And you'll see the reason why I had to do that. But it does appear that with today being the expiration date for this stock, and with me still being up overall on this position, it looks like my last adjustment is paying off pretty nicely. And then finally, I'm also going to put on a new position today in Las Vegas Sands. It's going to basically replace this one here in Wynn Resorts, because again, this one is expiring today. That being said, as always, before we get started here, in case this is the first video of mine you've come across, I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading and stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. Okay, so let's get started here. And actually, as I was speaking a few moments ago, if I scroll down here, you can see my CCJ position just came off for a full profit this morning. Specifically, I bought back those 3 naked call options I sold a few days ago. And you can also see I made some adjustments in NUE as well, and I'll talk about that a bit later. But first, I'm going to stop here and play a clip that I recorded from earlier this week that will show you in real time my thought process and analysis behind putting on this position in CCJ. Okay, today is Monday, September 13th, and what I'm looking at here is Cameco Corporation. I believe that's how you pronounce it, and the ticker symbol is CCJ. This is a uranium producer, and this will be the first time that I'm going to be trading this stock. And so, of course, as usual, the reason why this stock caught my attention is if we come down to the implied volatility charts. Let me expand it a bit here so it's easier to see. There we go. Take a look at this. A very nice large spike in implied volatility all the way up to about 90%. And this should come as no surprise because take a look at the price action chart. Look what's been happening here recently. This stock is absolutely exploding. And it appears that this has to do with the fact that uranium prices have skyrocketed recently. And also, Cameco is one of the latest trends in wallstreetbets. So this is likely going to become yet another meme stock like AMC, GameStop, Virgin Galactic, etc. And also, I do want to point out this is one of the very few rare cases where you see a spike in implied volatility when the stock is actually going up, right? The vast majority of the time when stocks go down, and specifically when they go down rather swiftly, that is usually when you see implied volatility spike. Because again, among the many ways to interpret implied volatility, this is basically a measurement of fear. And people typically get fearful when stocks go down, right? Not up. That being said, when stocks explode to the upside, and also when those same stocks catch wind in wallstreetbets, you will actually see implied volatility expand as the stock pushes higher. And then finally, take a look also at the RSI indicator. This one will tell you how overbought or how oversold a certain stock is. In particular, once this indicator gets above 70, you can argue that the stock is overbought and due for a correction or some short-term selling. And then conversely, if this indicator gets below 30, it is then considered to be oversold and therefore might be a good buying opportunity. So now the RSI indicator is all the way up to just under 90. So this is a great indication that this stock is definitely overdue for a correction. Moreover, if I push these charts back down again here, and let's zoom in a bit more, we could perhaps be seeing a top coming into play here. This morning, the stock did shoot higher all the way to $26.57, and now it has completely reversed and undone all of those gains. Now, I am not a pattern-based trader at all, but for those of you who may be, or for those of you who have an interest in that kind of thing, this would be considered a shooting star pattern, right? Where basically the stock shoots up and then it totally reverses all of those gains. And oftentimes you will see this after a massive rally as an indication that this uptrend is about to end, or that basically the stock is now exhausted to the upside and is about to start correcting and pushing down lower. Who knows if that will happen? Only time will tell. But I still like the odds here, the chance that the stock will reverse sometime very soon. Because stuff like this does not last forever by any means. And there are plenty of examples you can go to prove that. You can go to AMC, for example. massive short squeeze to the upside, and eventually it all came undone. If we go to GME, same thing, huge short squeeze, all came undone. Happened again, and a third time. Huge push to the upside, and then it came all the way back down. And one more example in Virgin Galactic, you can see it here, huge explosion, and then it totally reversed, and one more time right here. So point being, I do think we're going to see something similar in CCJ. And perhaps the beginning of that reversal is occurring right now. So let's go into the trade tab now and take a look at the option chain. I'm looking in the October expiration cycle, and I'm thinking of selling the 28 strike call options, just simple naked calls. I was also considering doing a bearish skewed strangle, where basically I would sell both a call and a put, but the delta on the call would be larger than the delta on the put. That being said, given that CCJ is just so high, I do think that if the stock does correct, it could fall by a significant amount, maybe all the way back down to about 20 bucks per share. So with that assumption in mind, I do want to take advantage of a downside move as much as possible, and that's why I'm going to lean in favor of just simple naked call options. And also, given that I'm selling these calls at the 28 strike, even if I'm directionally incorrect on the stock for the short term, if CCJ does turn around and push higher, well, the stock right now is only at 25 bucks per share. It can still push $3 higher, which is more than a 10% move to the upside before it even reaches my short call strike. That's a lot of cushion. So with that said, we'll go ahead and click the bid price here. That brings up the sell order automatically. And I'm going to sell 3 of these contracts. And we'll see if I can get filled around 152 bucks per contract. That would be nice. Because again, if I sell 3 of these things, my total credit would be 450-ish bucks. So finally, we'll go to confirm and send. Buying power effect is 737 bucks. That's fine. So we'll go to send. And there we go. Just got filled at 142 actually. I did have to come down a bit more in price, but 142 per contract, still not bad. And there we go. Last step is to set up my automatic buying order to close this position if I'm correct. So we'll come down here and buy back all 3 contracts. We'll do so for half price. So half of 142 is 71. So of course, if Cameco does fall in price and also implied volatility contracts, which will likely happen, again, keep in mind this situation is kind of the opposite of the norm. So for CCJ here, implied volatility will actually go down when the stock goes down as well. And the same thing happened for GameStop, Virgin Galactic, AMC, any other meme stock that skyrocketed for a short period of time and then eventually came back down. So the point being here, if those 2 things happen, and of course don't forget time decay, then those things will reduce the value of these call options enough to where I can buy them back for a much lower price of ideally 71 per contract. And then lastly, make this a GTC order so my buying order here stays in place indefinitely, either until it gets filled or if I cancel it myself, and we'll go to confirm and send, all done. Okay, today is Tuesday, September 14th, and in this clip here, I'm not going to show you any new trades. My portfolio is pretty adequately filled at the moment, but I do want to show you these orders I made this morning. So specifically, this is the final adjustment I'm making to my Wynn short strangle. This stock, if it comes to the charts real quick, go to WYNN. Unfortunately, this stock has fallen extremely hard today. Look at this. So Wynn Resorts is down by almost 10%. I'm not quite sure yet what the news is. I think it has something to do with China, but I will look into it in a minute. But if you recall, if you've seen my previous live option trading videos, this was a position that was giving me a pretty hard time throughout the expiration cycle. This position still was looking pretty promising by the expiration date, which is only 3 days away. I was still on track to make a full profit, but this massive down move definitely changed things. That being said, I was able to make one final adjustment. So if we come to the trade tab real quick, you can now see I am short just a straddle. So I rolled down my call option, rolled up my put option, both now at the 95 strike. Originally my call was at 96 and my put was at 92.5. So again, I rolled both my options to be at the 95 strike straddle. And also I am short 100 shares of Wynn stock. So let's come to the monitor tab real quick and we can see the details here. This first order, this sell of 100 shares, and you can see this was to close. This was the first thing that happened this morning because initially, let's come back to the charts real quick here. Before today, right, Wynn was all the way up to around 103 bucks per share, which was well above my initial short call strike at 96, right? Before I changed my strikes this morning, my call option was at the 96 strike. And so because of that, I was long 100 shares of Wynn Resorts up until this morning. And then once the shares tanked on the market open, that's when I sold those shares immediately for the best price I could get filled at, which was $94.38. So I did take a pretty steep loss on these shares because originally I bought the shares around 97 bucks and now I sold them for 94.38. So it definitely took a pretty big hit there, but my other adjustments still allowed me to take in enough credit, enough additional credit to still potentially eke out a very small profit by the expiration date on Friday. So focusing on this order right here, this one was to roll up my puts. And so specifically, you can see I bought back my 92.5 strike put and then sold to open the 95 strike put. And in doing so, took in an additional 103 bucks of credit. Not bad. And then for this order, in a similar fashion, this was rolling down my call option. So you can see I bought back to close my 96 strike call and then sold a new call option as an opening trade at the 95 strike. And again, by doing this, I took in additional credit, which came out to be 59 bucks. So the total additional credit I took in from all these adjustments was $162, which is actually a pretty decent amount considering the expiration date is only 3 days away. Most of the options on Wynn Resort in the September expiration cycle do not have that much premium left in them. And then finally, this second order to sell 100 shares of Wynn Resorts, you can see this was an opening order, not a closing order like the first time. So this one here corresponds to when I shorted 100 shares of Wynn stock at 94.71. So ideally with a short straddle pinned at the 95 strike, as you just saw here, ideally I would want to buy or short the shares depending on where the stock was going as close to $95 per share as possible. And in this case, getting filled at 94.71, that's pretty darn close, especially given the fact that I had to do all this as quickly as possible because obviously the stock does move. Now this is also the first time I'm attempting this kind of adjustment. I've never had to roll my options all the way to a straddle before. Typically, I've just had to roll in my options by a little bit, take in a few extra bucks in credit, and that has been enough. But for this position, since the stock did just fall so hard, and I did lose a fair amount of money from the stock specifically, that's why I had no choice but to step in and make this kind of aggressive adjustment. So we'll see what happens here. I just have to get to Friday to survive the next couple of days, and potentially, if nothing more goes wrong, I might still be able to walk away with a very small profit here. So stay tuned. Okay, welcome back. I hope you enjoyed that clip. And so yes, as I mentioned earlier, I did just take off my CCJ position this morning for a full profit. So if we go to the charts real quick and we go to CCJ, and we'll zoom in a bit here, so you can definitely see that the stock is now finally making its way back down. As I explained in that clip, when stocks explode to the upside, it will never last forever. Stocks eventually do come back down. Moreover, if you come down here and I expand the implied volatility chart, we are seeing a somewhat moderate decline or contraction of implied volatility. So this contraction, combined with a nice drop in the stock price and also a bit of time decay as well, all three of those things combined are what forced the prices of those call options I sold to basically get cut in half. And that's where I bought them back at this morning. So a very nice and quick trade there. Now, before I go over the rest of my current positions, let's come over to LVS. This is Las Vegas Sands because I do want to put on a new position here today. And so this stock, just like Wynn Resorts, did take a massive hit earlier this week, which you can see right here. And accompanying this massive drop was a huge expansion in implied volatility. So right now we have an IV rank of 74%, that's very high, and an IV percentile of 90%, that's extremely high. And in case you are not aware, these two indicators simply tell you how high or low, relatively speaking, the current level of implied volatility is. So based on the past year, the implied volatility right now for Las Vegas Sands at just under 58%. This is on the very, very high end of the range for the past year. And so, of course, what this translates to is very expensive options on this stock. So someone like myself as an option seller, that's going to be attractive to me to come in and start selling these overpriced options. And now one thing I want to note on the price action chart here, let's come up to the drawing tools and we'll go to my trend line tool. There you go. Let me draw a support level right around here. And then I'll come back, switch my tools back to the cursor so I can zoom in a bit more and take a look at this. You can see back in around late August, around August 20th, Las Vegas Sands made a low of around 36.5 bucks per share, bounced off that. And then once this massive drop occurred, look where the stock came down to again. It perfectly touched this support level. Same exact price as where it ended up earlier this year. So based on this, I do think there's some pretty strong support around 36 to 36 and a half bucks per share. And that's going to influence the strikes that I pick for this trade. So let's come to the trade tab now. And I'm going to remain in the October expiration cycle, 28 days left to go. Now I definitely do want to get bullish on this stock for pretty obvious reasons. And so there's two ways I can do that. I can sell just a simple naked put option, or specifically two of them, or I can sell a bullish skewed strangle, which is basically selling both a put and a call at the same time, but making sure that the delta on my put is larger than the delta on my call. So in this case, I might actually want to move my call to the 43 strike. This one here only has a 19 delta. And this trade here is what I'm leaning in favor of. If I were to just sell the 36 strike puts, which as you saw is right at that support level, I would only collect about 130 bucks per contract. That's not bad for a stock around 36, 37 bucks per share, but I do want to collect a bit more in credit because the implied volatility is just so freaking high right now. And one of the best ways to take advantage of super high implied volatility is to sell both sides, a call and a put. And then simply by choosing the call to be a lot further away from the stock price, that's what still gives me that bullish bias to the overall position. So we'll come back to the trade tab one more time. And actually, I'm probably going to go to the 44 strike call with only a 15 delta, just give myself a bit more room to the upside, just in case this stock does rally back pretty hard. So I'm going to right click here and go to sell and then strangle. That brings up the order down here below. I'm going to sell two contracts each, two calls and two puts, 44 strike call option, and then the 36 strike put option right there. Total credit per strangle is going to be 170 bucks. So in total, that's 340, which is pretty good. And then last thing is to go to confirm and send, check the buying power effect. It's going to be about 1,200 bucks. That's fine. So lastly, we'll go to send. And there we go. Just got filled immediately at 170. Awesome. And then the final step is to, of course, set up the buying order to buy this strangle back if I am correct. And in this way, I don't have to just watch my positions 24/7 to wait for them to hit a certain profit target. This order down here will take care of that automatically. So again, buy back two contracts, 44 strike call, 36 strike put, which is right there. And I'll buy these contracts back for half price. So half of 170 is 85. And finally, make it a GTC order, confirm and send, all done. And so now with that being done, let's come back to the monitor tab and take a look at my other current positions. Now, starting off with JD, this one definitely has behaved this week. I have not had to make any adjustments or really have had to watch this one at all. This one initially was a naked call option, but if you did see my last week's live option trading video, I did have to make an adjustment and sell the 72.5 strike put, which you can see here. And currently with the stock, let's come and see JD. The stock right now is just under 78 bucks per share. So still definitely between my strikes, a bit close to my call side. However, like I said, nothing to do with this position, at least right now. Let's come back. Next up, we have my only naked put option position. This is an EWZ. This was looking pretty good earlier this week, but it has definitely turned south today and also yesterday. Overall, I'm down on this position by about 72 bucks, which is not a big deal. $72 is definitely not a lot. But when you consider I was up on this position by about 150, I think at the highest point, obviously it's a bit frustrating to see all those gains go away and then turn into losses. And so if we come to the charts for this one, go to EWZ. Here you can definitely see why. So let me push these charts down a bit so it's easier to see. We've had 1, 2, 3, 4 down days in a row, massive down days, I will say. And now we're getting very, very, very close to my put strike. My puts are at 33, and currently EWZ is at 33.11. So we'll see what happens here. If the stock does start to breach my puts by a small amount, I will have no choice but to start shorting shares of this ETF. And on top of that, to rub more salt into my wounds, we are seeing a little bit of an expansion in implied volatility this past week as well. That is also hurting my position too. So I'm definitely watching this one carefully, but so far, nothing to do here. Let's come back. Next up, we have my Alibaba short strangle. This one has gone back and forth in terms of profits and losses quite a bit this past week, but today this stock definitely is coming back. Overall, I'm up on this position by just under 200 bucks. 117 of those profits just came from today. So very briefly, come back to the charts, go to BABA, and I'll zoom in. So here we go. Just like most Chinese stocks this past week, We've had down days almost every single day in a row, but take a look, I'll zoom in a bit more. Take a look at what's happening right around this major support level. So I'll click on this one here and drag it on over. There we go. So as you can see, this support level here in red is still holding. It held here, once here again, and then now a third time, so far at least. And my put strike is below this point at around 150, so I do have some cushion if the support level does fail. But so far it does seem that perhaps next week we might see a nice bounce in this stock alongside other Chinese stocks as well. And if that does happen, I would expect to be able to take this strangle off for a full profit sometime next week. Now let's come back. Next up, we have my NUE short strangle, which as you saw earlier, I did make some adjustments on this morning. So specifically right here, you can see I did roll down my call option from the 140 strike, which is where I was initially, and I rolled this call down to the 120 strike. And in doing so, took in an extra $105 of credit. And alongside that, I did also short 100 shares of this stock at a price of 108.32. The reason being, if you come to the trade tab here and go to NUE, and I'll scroll down a bit, my put strike on this position is at 110. So ideally, once my put strikes get breached, that's where I want to short shares of stock. Now, because I did not get filled at a very good price, as you saw, I got filled almost $2 below my strike price here. That's why I rolled down my call option. Because if this stock does continue to just move lower over the course of this expiration cycle, or if it does reverse and end back above my put strike, in either case, I'm going to lose about $170. And so ultimately, in order to compensate for that, again, that's why I rolled down my call and took in an extra $105 in credit. Almost totally canceled that out, so I'm pretty happy with that adjustment. And as you can see now, with the stock at 105.34, it has dropped even further, so this overall adjustment I made this morning so far has been a pretty good move. So let's come back to the monitor tab, and 2 more to go. I still have my short strangle on in WDC. Specifically, I am short the 60 strike put and the 80 strike call, and this stock has been below my put strike for quite some time now. If we go back to the charts real quick and go to WDC, you can see if I zoom in here, once the stock broke down below $60 per share, which is right around this level, it has stayed below that price. And that's fine. I don't care if this stock goes to zero because I am short 100 shares of this stock as well. The main thing here is I just don't want this stock to repeatedly bounce through my put strike over and over and over again. Because in those cases, like I experienced with Wynn Resorts and a bit with NUE, every time that happens, I am going to lose a small amount of money, about 30 or 40 bucks. So ideally, if I'm just directionally incorrect on this position, which so far I am, I just want the stock to cut through my strikes and just keep moving. Because in this case so far, I only had to short the shares one time, right when I cut through my put strike, and I got filled at a very good price. So again, at this point, the stock can go to zero for all I care, and the profits I'll make on the short stock position will totally cancel out the losses on the short put position. And ultimately, in the end, I'll still get to walk away and keep the credit I sold this strangle here for initially. And then finally here, coming back one last time, we have my Wynn Resorts position, which as you saw earlier in one of those clips, I did have to make a very aggressive adjustment and move my strikes, both the call and the put, to the 95 strike, and also short 100 shares of the stock. And so like I was saying earlier in this video, this adjustment is what's allowing me still to walk away from this trade once the market closes with a small profit. And that's because, one last time coming to the charts here, go to WYNN, this stock has dropped significantly, all the way down to just under 84 bucks per share now, which of course is far below my 95 put strike. But because I shorted 100 shares of the stock very close to 95 bucks, again, all the losses I faced on the put option were totally canceled out by the gains on the short stock. So all that remains is simply the total net credit I still have on this position, which I believe amounts to around 100 bucks. Now, if I wanted, if I come to the trade tab real quick, and we'll go into the September expiration cycle. Again, these options are expiring today. I could go in here and simply close out this position, basically buy back these contracts, buy back the stock, and do everything manually. The issue with that is, with this option being so far in the money, my put option here, I am a bit worried about the bid and ask differential. You can see right now the bid and ask are about 25 cents apart, which is definitely not a large amount, but if I were to try and buy back this contract, which is very far in the money, there's obviously not a lot of volume on this contract, I might not get filled at a very good price. Basically, I might have to give up some extra dollars in profit to buy this contract back. And same thing potentially with this call option. This call option should be worth exactly $0.00 because there's no way this option is going to be in the money by the market close. But still, I might have to pay maybe $1 or $2 to buy this contract back. I don't want to do that. So point being, I'm just going to sit on this trade all the way to the market close. And then what's going to happen is this call option will just expire worthless. I won't have to spend any money to buy it back. And then on this put option, I'll get assigned on it. And as a result, I'll have to buy back the shares I shorted at a price of $95 per share. And since I shorted those shares right around $95 per share to begin with, I think I will only lose a few bucks when that happens. And then again, this put option will also just disappear. And once that's all said and done, I'll finally be out of my Wynn Resorts position for probably around an $80 profit, which when you think about it, after all the adjustments I made and having to buy and short the stock multiple times as it blew through my strikes and whatnot, to still walk away with an overall profit, that's a very, very good thing. Especially when you consider the fact that my initial strangle, before I made any adjustments many weeks ago, I was actually short the 92.5 strike put and the 115 strike call option, way up here. So if I did not manage this position at all, or if I took the approach of simply just rolling down my call option to take in some extra credit and that was it, I would still have a very large loss on my hands here. With the stock being almost a full $10 below my put strike, there is no way I could ever collect enough additional credit from rolling down my call option to compensate for that. So basically, I turned what would have been probably around a $500 loss into about an $80 profit. And that's the power of selling naked options and then using the stock to cover any of the contracts that go in the money. It's definitely not a risk-free way to make money trading options, but it does eliminate a lot of the risk. And so with that being said, that's going to conclude this video. I hope you enjoyed it. And please let me know your thoughts or if you've got questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.